Hello again, and thank you for joining us. I've got Will here, our Director of Financial Planning. We're going to tackle another question, or maybe even just more of a general topic. How can you prepare? What do you do? Building a strategy for the inevitable market shift. It's been a solid bull market here for the last 5 or 6 years. The market's off to a decent start again in 2026. When I think long term and I think market ups and downs. Yes, we've had a couple of 20, 30% drops, but I go all the way back to 2007, 2008 in order to say, this is the last time that we really went through an economic shift. And when you look at some of the information, some of the data, stock pricing, valuations, things like that, we're starting to hear and get the questions a little bit more, how much longer can this really go? When is that slowdown or recession going to come? And what can we do to prepare for it? So this is just a good quote here from Peter Lynch. It says, far more money has been lost by investors preparing for those corrections or trying to anticipate them than has been lost in the corrections themselves. And it's so true. It's so true. Trying to time that market and get in at the right time, get out at the right time. Every single time you do that, if you're losing 1% or 2%, that can eat away at that total return. What do you say, Will?
Yeah, I love, just that initial first kind of slide we had up there, the inevitable correction, right? And kind of what we're saying is we're not predicting a crash by any means. That's exactly kind of the interesting hook we wanted to try to then set up this remaining conversation to say, you can't predict the crash. We know it is going to happen eventually. When that day is going to come, we have no idea. Our guess is as good as yours, really. Nobody really predicted 07, 08, apart from the famous few that got movies made about them. But everyone else, right, the general public, the average Joe, even the average person in this industry was completely blindsided by that event. And that is most likely what will happen at some point in time in the future. Inevitably, throughout my career, throughout our careers, it will happen again. So how do you prepare for something that is eventually going to happen, but you have no idea when it's going to happen? And what our answer is first, taking a look at this chart and saying, well, the obvious answer would be, okay, well, then we just need a super conservative portfolio, right? Either all bonds or all cash, and just, completely stay away from the stock market. If I know I'm going to get hurt eventually anyway, why would I even, participate in that? But then you take a look at this chart here and you discover how much money you're actually missing out on, the gains you're missing out on if you do try to time the market here and there, try to go to cash, become very, very conservative in the nature of your investments. You can see the impacts of those by looking at this chart here. Just if you miss the best days over the last 25 years, really harms those returns. And, you're in a really, really negative position if you do try to accomplish that.
Yeah, I'll just look at that very first one underneath. So you got the S&P 500 total return, right? 7.98% per year from June 30th of 2000 over the 25-year period ending June 30th of 2025. So 25 years, 7.98%. But that first line down, if you simply miss the 10 best days, your average annual rate of return fell 3.4%. That's incredible. If you started with $100,000, you're talking about the difference between $381,000 that you missed out on if you simply missed the 10 best days. And I know what the reaction is. Well, what if you miss the 10 worst days? Well, again, it's the assumption that you have the ability to know when those 10 worst days are going to come and get out before those happen. The other thing that we don't have this data, but I've seen it before, is that those 10 best days, that if you miss them, how catastrophic they are, they come so close in date to the 10 worst days. The 10 worst days, right, those are going to shake everybody out. Oh man, the market's down big, it's going to crash, I'm going to sell now. Well, you typically get that snapback rally, usually after some big, heavy selling days, even if it's not the one that goes all the way back, but that quick little snapback rally. If you miss out on that, 10 times, it's catastrophic. And those big days come usually shortly after the 10 worst days. So then you're sitting there trying to time the market all over again, and it is a wild, wild game to be trying to do
I
that.
think that transitions beautifully into the next slide that we have here. What impact do recessions have on the S&P 500, right? It's that old adage, right? Zoom out, right? Just zoom out, take a look at how impacts have traditionally impacted markets and our economy. Yes, that short-term pain is hard to get through, but throughout the history of the United States stock market, right, it has always recovered. That's what we need to keep front of mind at all times, both in the good times and the bad times. And that's the importance of, right, staying invested, but having a plan for those more volatile times in the market. And our clients hear this every time we meet with them, especially our retirees. But that plan is a 5-year income plan based on the data that we have available throughout the stock market, throughout historical returns. It states that over a 5-year period, anytime you go back in history and look at any 5-year period, 89% of the time after 5 years, the stock market will be positive. So what our philosophy is, hey, we really like those odds. We like the 89% odds that we can get staying invested in the S&P 500 for those 5 years. But what about the 5 years when we need the money, right? The next 5 years, our first 5 years of retirement, or our next 5 years of retirement, when we need those dollars to be available and not fluctuating with the market, what do we do then? Well, we protect those to the downside. CDs, structured notes, bond funds, we really, really utilize those in the next 5 years of your retirement to make sure we're not relying on a very volatile market that can have ups and downs. We don't want to sell during those downtimes. We just saw the impact of that on those last two charts. So let's go ahead and switch our investments out of stocks into more predictable investments with downside protection in the 5 years that we know the stock market, doesn't have an 89% chance of being positive, right? It's less percentage chance that the S&P 500 will be positive when you look at one year time periods, 2 year time periods. Anything before that 5-year time period, the S&P 500 is very, very volatile. Can be in some years. So that's what we mean by stay invested, but have a plan, right? Have a backstop. Know that these are going to come. Understand you do not know when they're going to come. So you need to be prepared for those short-term time horizons when we just can't predict what's going to happen.
Yeah, you said two key things. I love the way you said, it's inevitable. We know it's going to happen, but yet we know we can't time it. So you might as well, that risk management, you might as well just build it in. Right? Mm-hmm. If we know it's going to happen, we don't know when, just build that plan in ahead of time. We get asked, what are you going to do if? And to me and to us, and we have this internal conversation all the time, it feels so good for us to be sitting in the chairs we're sitting in, managing people's life savings with the expectation that we're helping them, guiding them get through this period of time when it comes, is that we are proactively managing that situation, right? We will also reactively manage that situation. We will be there. We will help try to navigate through those markets the best we can with portfolios. But it sure feels really good to have the plan in place before it comes, right? Knowing that it's inevitable and that we can't time it. So great stuff, Will. I appreciate you joining me, taking the time. We appreciate everybody watching. If we can answer any questions for you, do not hesitate to shoot us them, and we'll do our best to get them answered. And we hope you have a great rest of your day.